Elon Musk tweeted out that they were no longer taking payments to, pay for their Tesla sales. Bitcoin was, very, very fossil fuel heavy in its network.
Tesla CEO Elon Musk tweeted that the electric vehicle maker would suspend car purchases using Bitcoin. He said, "We're concerned about rapidly increasing the use of fossil fuels for Bitcoin mining and transactions."
Bitcoin's moving lower this morning, and once again, we are asking ourselves if it's the Elon Musk effect. Last night, he tweets a Bitcoin hashtag with the broken heart emoji, along with a meme about a couple breaking up, referencing lyrics from a Linkin Park song with the lines, "So in the end, it didn't even matter."
What do you two think is the reason for this drop? Can you talk about that a little bit more?
Yeah, there was we saw, I wouldn't say institutional, I'd say, technically they were whale selling, holders of over 1,000 Bitcoins. So that's either very, very large holders that are personal and private, or institutional. But their holdings dropped, and they were dropping slightly before the crash. And so, yeah, that dropped. And unlike, normally what we see is what we have seen in past months is whenever the institutions or whales dropped their holdings, the next tier below, which is like 100 to 1,000 Bitcoins in holdings, they would gain almost a mirror image, and they were soaking up those coins. And in this case, the next tier below, the what we call the dolphins and sharks, they were pretty steady. And so all of those coins that were being unloaded by the whales just had to be absorbed by the smaller buyers, which they couldn't maintain the price at that point. And so, yeah, despite the interesting thing was that as this whole thing started to cave and the price dropped, and crypto Twitter, the world was going, "Oh, Bitcoin's going into a bear market. We don't see 50% drops like this without like a bear market." That was completely different. That view was completely different on chain. We saw a whole lot of new entrants come in for the very first time to buy their Bitcoins, and the holders of one Bitcoin or less, so $50,000, $30,000 investment, those numbers started skyrocketing. And so smaller players came in to buy that dip, and so the actual user count on the network increased as this thing was selling down. And it's just that the buying power by a sea of smaller retail was not sufficient to counteract the sell-off coming from whales. That's interesting, because I'm seeing even in the chart analysis and looking at the way in which the price action is analyzed, the selling comes from Binance and the buying comes from Coinbase, and there's a net shift in coins. And I don't know if it's some intricate arbitrage thing that's happening, or whether or not it is actually Chinese, the Chinese selling their coins. And now that we've seen they're banning mining, I don't know what's causing that, but it definitely looks like the West is buying and the East is divesting.
So I don't remember what the exact wording was in the blog post where it talked about that, but I feel like it hinted at people essentially trying to move their coins offshore, maybe to avoid certain regulation or something. So,
capital flight.
But Willy, you feel like it's simply that Asians are or the Asian market is selling, and that the Western market is buying.
I'm just guessing at theories. I have no real information. I'd probably have to figure out what's really happening in the industry by talking to people, rather than just looking at the sheer numbers on charts. But yeah, and back to this point of the supply on these exchanges. The interesting thing for me is that we've been in an era with such strong institutional and high net worth buying, that on-chain has become very dominant in the first half of this year, because those guys move their coins off the exchanges and put it into cold storage. But now we're in this phase where retail's really ramping up and they're coming in to buy this dip. And typically the second half of these, 1 in year bull markets that, go crazy vertical, the tail end of it is very, very dominated by retail. And I think the picture might be a little bit harder to read, mainly because there might be a lot of buying from retail. But they don't withdraw from exchanges as much as an institution would. They're quite happy to leave their coins on their Coinbase wallet. And so you'll see potentially the supply on these exchanges increase because they're in long-term holdings by retail. And it looks like coins are being sold in, but in actual fact, they're in long-term hold by retail who are just using the exchange wallet. So I think the second part of this year will be quite interesting, and I think we need to know that that effect is happening. Obviously, a lot of people have seen from the news that Elon Musk tweeted out that they were no longer taking payments to, pay for their Tesla sales, and they cited reasons that Bitcoin was, very, very fossil fuel heavy in its network. And so in that view, there was someone who was relatively respected amongst technology actually validating a lot of one of these FUD points that the mainstream media have been throwing at Bitcoin, which I don't think is actually valid, but nevertheless, it sent a shockwave of fear through the market. The price started plummeting within seconds to minutes of that tweet. And the market setup at that point was already quite soft. It was making a light recovery. It was tentative, and it was starting to move upwards. And that's also from a fundamental lens when you look at what was happening on the investment activity on the blockchain. And then when that tweet came out, it instigated severe amounts of selling, not only on derivative markets and spot markets. We actually saw significant sell-off as coins started to flow into exchanges. So real coins got moved, and they were moving from wallets that were quite young. The coins held between 1 to 6 months of age, so relatively new comers to Bitcoin is what I can tell. And I think a lot of them saw a lot of really nice rises in Bitcoin from the 20,000 up to the 60, in the 50 to 60 range, and they probably took the opportunity to take profit. And so we saw this huge I just call it tidal waves of coins moving into the exchanges, and ultimately the whole derivatives market started to unwind. Anyone who was long got liquidated, so that added further selling pressure, and so just we had this cascade of complete unwinding and sell-off. And I think it went down to 30 or 29,000 when the final dust had cleared, and it bounced up, and then it was recovering. And then China announced that they were banning Bitcoin miners and reiterated their stance on no trading for their nationals. So and that's a big thing because miners are heavily located in China.